Hi everyone, Sam here. Let's get started. Good to see everybody. How you doing, Dennis? Great to see you. Yeah, no, I know. Yeah, lots we could talk about there. But great to see you, and yeah, let's spend some good time together. All right. Hope everyone's doing well since the last time we were together. If you want more information on what we talk about here, you can always join one of these free workshops. If you're new, you want to go to the introductory workshop. If you have some experience and are struggling, you may want to, good idea to go to the advanced workshop. But let's dive into today's topic. It's a big one. Market traps. Risk disguised as opportunity. So you can probably consider this session today part one, and there'll be another one of these coming up soon, and Seamus will be delivering that. Similar, just going to take the topic just much deeper. So today's focus with market traps, we're going to focus on breakouts. Breakouts are very popular. Right, probably breakouts and trend trading are two of probably the most popular trading styles and strategies out there. As in most of these, they are simply risk disguised as opportunity. Now, before we dive into breakouts, and we're going to look at a lot of trading opportunities from this past week. And you'll see how it all works. But before we dive in, it's important to understand how the markets really work. So let's take a step back and spend just a few minutes on that. So the origin of the rule-based strategy that we go over here, developed that many years ago on the trading floor of the Chicago Mercantile Exchange. As I've said many times, I was working on the professional side of the business down there, right, on the trade desk, and my job was to facilitate order flow from banks, institutions, money managers, funds, you name it. And it was illegal for me to trade my own account, and anyone in my position, it was illegal for them to trade their own account. Why? Because right in front of you, you had the market's real demand and supply, right? It was like cheating. You probably wouldn't lose, right? If you knew the market was going to turn higher at demand, and you knew where the market was going to turn lower at supply. You had the orders in front of you. So, seeing that, and really being at the ground level of the buy and sell orders, right? Some of the biggest buy and sell orders out there. One of the biggest things, a lot of light bulbs went off for me back in the early days, in the beginning. And one of the big ones was when I realized, handling order flow for banks, institutions, money managers, hedge funds, individuals, right? Retail accounts, all that. You see clearly by tracking the orders and see where people are buying and selling. You see that there's really two groups at the highest level. There's two groups. There's the people who make money consistently and the people who don't. And then when you see, who those two groups are, it's also very clear. And again, I had access to that information. It was right in front of me. You see banks and financial institutions tend to be right in their decision-making process most of the time, and as a whole tend to make a ton of money. At the same time, the novice retail trader or investor is equally wrong in their decision-making process most of the time, and as a whole tends to either lose money or not even come close to achieving their financial goals. But the big light bulb for me is when I really realized that, wow, that the gap in performance between the two groups is so wide, yet they're both buying and selling in the same market. So what's really going on here? That's what piqued my interest. When I realized that, I thought, ooh, I'm going to figure out what the group that's doing it right is doing, because I want to buy and sell where they buy and sell, right? Pretty simple thought process there. Looking back in the chat here real quick, I'll try to get to questions as I see them. I certainly won't be able to get to all of them, but you know, I see your comment there about sometimes there's hidden supplier demand like dark pools and other things like dark pools. Correct. However, that doesn't change supply and demand, or at least the strategy at all. Even if there are orders that are not in the market that you and I have access to, they still have the same effect, and they don't need to be, you know, if a big order goes off and it doesn't go through, for example, NASDAQ or the CME or what have you, it still has the same impact. So it doesn't change anything. Does that make sense? Right? And if you don't know what dark pools are, don't worry. And there's other versions of those things, but ultimately, right, those hidden buyers are still buying the supply available at a price point, right? Exactly, Lisa. You will still see the exact same effect on the price chart. Okay. Yeah, nothing can change that. There's nothing that can change supply and demand. You can even cheat the system for a while, and believe me, that goes on too. But in the end, the invisible hand always works itself out. We're going to see how that works in just a moment, right? So the real question is, and when I'm talking about the trading floor and all the stuff I'm talking about, buy and sell orders, that was back in the mid to late 90s. It's 2021 today. What's changed? How much has that changed over the last many years? In other words, has the gap in performance between the professional and the novice changed with all the advancements in technology? Is everybody making money today? Right? Does the average trader and investor out there now make close to the returns of a bank or financial institution? No, right? That's what's fascinating. The gap hasn't changed at all. In fact, if anything, it's gotten worse. Why is that? Well, with advancements in technology and all of the, easy access to communication and information with the internet today, what's happened is you have all of these goofy trading strategies out there on the internet that people just read and start executing. The problem is they don't think. They don't ask the simple question: how do markets really work? Exactly how and why does price move in markets? Yeah, good stuff in the chat there. Dennis, thanks for answering some of the questions, just like the old days. Excellent. All right. Dennis has been at this for a while. He definitely knows what he's talking about. And there are plenty of others in the chat as well. Okay, so let's move forward. So when you Google breakout trading, look at the amount of results that come up really quick, right? Over 20 million results. So there are a lot of people looking for breakout trading information, right? Yeah, but Yazid, even if it was 99% of trading in 2021 as algos, all that means is the supply and demand is happening faster, right? And it doesn't change the nothing's changed. It all just faster, and I would say almost a little bit easier because we just see it all, right? Okay. So, let's put some puzzle pieces together. When we ask Google what percentage of traders lose money, and I don't know, none of us know if these are the actual factual numbers, but they're probably pretty close. And we also see a lot of people are asking that question, right? But Google says 90%. Well, the next logical question is, what are the most popular trading strategies? And certainly we can throw breakout trading into that category. So a lot of people are choosing to, and we see it, there are a lot of trading information and education groups out there that, break out this and break out that and everything. But let me walk you through this, and I think you'll understand what we're talking about. So a lot of people are focused on breakouts, and a lot of people are losing money. Why? So let's take a look at one market trap, breakouts, and how exactly it all works. Okay. And at the core, we've got to always remember and focus on how the markets really work. There are many other market traps. There's news-driven market traps. There's fundamental analysis market traps. There's Globex traps. There's earnings traps. We'll go over all those in times and other sessions. Today, let's focus on breakouts. All right, so take a look. So we're going to look at a bunch of opportunities that we went over this week. So these are every morning, Jasmine and I have a live trading and analysis session for our members. And these are all screenshots from this week. All of them, I think, except one. So let's look at what we had this week to deal with and how we dealt with it. And I want to, and a lot of it has to do with this concept of breakouts. Not that we're doing that, but watch. So first of all, let's walk the simple logic through like we do. So here's the setup on the left, right? So we have a demand zone, and what tells us that demand likely exceeds supply here at a level that we are willing to be a buyer down here when price comes back to the level? Well, notice price is trading here for a short period of time. There's a strong rally. Price settles out up here for a while. The only reason why price cannot stay here and moves higher is because demand exceeds supply at this level. If that statement was not true, price would just keep trading sideways here, but it couldn't. Why? Demand exceeds supply. Later on, right, price falls out of this area, and we'll talk about this area in a minute, and this whole diagram on the right, falls out of this area down to our demand zone, spends a short period of time there, and then shoots right back up to here. Now, you took that trade, Philip? All right, well done. This is the Aussie dollar. So we're going to look at multiple asset classes here too. We'll look at FX, we'll look at stocks, we'll look at, equity index markets, we'll look at all that. Okay, so instead of just focusing on this picture that represents demand, and we can do that, and we always do that, let's take things a little bit deeper here. And the goal is that you understand the supply and demand order flow, or the relationship that's going on behind the scenes that's responsible for the creation of the candles. Here's how it works. Any market out there on the planet, whether it's a financial market or the market for anything you could think of, it's all about supply, demand, and fair value. Okay? Demand down here, competition to buy. Right? That competition to buy eliminates itself, which ends up pushing price higher. Right? Okay. When demand exceeds supply, ultimately price pushes higher because of the competition to buy. Same thing at supply, which means competition to sell. Right? At price levels where supply exceeds demand, eventually that supply or competition to sell eliminates itself and pushes price lower. The middle, though, is just as important, and a lot of people don't think like that. Fair value. Fair value means really where the majority agree to buy and sell. So prior to price coming down to this demand zone, and don't worry, we're going to bring breakouts into this in a moment, but it's important that you understand how the markets work first. So prior to price coming back to the demand zone where we want to be a buyer, notice the majority of trading activity is right here. In fact, a very high percentage of all of the trading activity you see on this chart is right in this area, right? So that means that during this period, the majority of buyers and sellers agree to buy and sell in this price range. That's fair value. Because of that, because the majority agree to buy and sell there, that is naturally going to pull price back to the area, back to fair value. Does that make sense? So supply and demand push price back to fair value. fair value naturally pulls price back to it because, again, the majority agreed to buy and sell here. Make sense? So when price gets, moves out of fair value for a short period of time, like any market, right? That competition to buy at demand, which we already identified. Banks are clearly buying the Aussie dollar down here. The chart's already telling us that that's likely happening in a big way. When price comes down here, that competition to buy pushes price back up, and that fair value pulls it there. Make sense? And that's how any market works. I didn't invent supply and demand. I may have put the strategy together years ago, but nobody owns supply and demand. This is how markets have always worked. This is how they will always work. I'm just the messenger. Now, let's bring breakouts into this. One of the most popular strategies and pieces of guidance out there that a lot of people actually pay for is to be alerted to when prices break out above the prior week's high, or yesterday's low, or a new 2-month high, or a new 3-week low. Everybody know what I'm talking about? There are literally services out there that people pay for so you can get that information. And here's a great example. So this low right here, along with this low, happened to be the low of the prior month. Actually, about the low of the about last month and a half. Yes, Dennis, but I wasn't going to say that, but you did. Anyway, so here is the prior month and a half's low. When price breaks down through that level, what are most novice traders taught to do? Sell the market, sell short right here, because there's a breakout to a new month's low. And that's what most people do, right? Just look on the internet. You'll see exactly the rules around it. Well, anyone who's selling after such a big drop in price, and of course into a price level where demand exceeds supply, right? That's why you see prices turn and move in the opposite direction so fast. Does that make sense? Novice traders selling, professionals buying, price shoots higher. Now let's talk through the mechanics of this, and we'll go quicker on the next few that we look at. But it's important that you understand what's going on behind the scenes. So back on the trading floor, you see this happen all the time. And being on the trade desk, handling the order flow, you really see this going on. And let me explain. So price comes down to this area where obviously there's been a lot of interest on the buy side here, right? We see that. The prior month, that was a low. Then the next area, right here, that was the low. Now price breaks that level. Okay, so this is where, again, typically novice traders will come in and say, okay, I'm taught to buy breakouts above a significant high or short breakdowns below a significant low. That's happening right here. I'm selling short. Okay, and we saw this on the trading floor. Well, now that trader has sold short, and where do they put their buy stop? Right? Where do they put their buy stop? Whoever's selling short on a break of this significant low, the 1-month low, where's the buy stop if they're wrong? It's right above this area. How do we know? Just go read the rules on the internet of all the lessons and everything for people that do this and all the companies that push it. So their stop is going to be right here. And I saw this on the trading floor. So watch how this works. So now, novice traders selling short, who's on the buy side? Banks and financial institutions, the professional are sitting here saying, wow, you guys want to sell here? No problem. I'll take all that off your hand. They're sitting there with their arms wide open. I'll take that. Buy. However much you want to sell me down here, I'll take it. Right? Now, the smart money is on the right side of the market down here. And as soon as the last novice seller who potentially sold the breakout to the downside past the 1 month, below the 1 month lows, as soon as that last seller sells, Now what? You have no more sellers and lots of competition to buy. Now price starts screaming higher. Okay. Now think about it. Okay. Think about it. The people that are sold here and have their buy stop above, now they have to get out, right? So they have to buy back their short position. So who's going to be the seller that's going to let them out of their losing position? Right? Again, the smart money, the professional, the bank, the financial institution, the market maker, right? And again, I started on that side of the business. So you see this happen almost at every significant turning point, especially the big breakout opportunities. Okay. So now if you're the seller for, to the buyer who has to buy back their position for their loss, what might you do? If you're a smart seller, well, why not raise price a little bit? It's not a matter of, does the short seller here need to get out? They definitely need to get out. It's a matter of when. Does that make sense? And that's how it works. You'll see a lot of, there's another huge topic out there that you'll see all over the internet and in trading books. And it's, you'll see things that say, a lot of breakouts fail, right? Failed breakouts. Well, nothing's failing. Right? There's nothing failing. The reason why they call it failing is because a lot of people don't understand how the markets really work. It's just simple supply and demand. The main point here is just above this demand zone, there's a big invitation to sell to the novice trader, and it's the breakout of the 1 month low. Okay. All right, let's keep going. So that was 3 days ago. Let's look at the Russell, and this is 2 days ago. So the stock market was on a big rally, and then we had a drop, I believe, what was it, yesterday, and then down to demand, and then a big rally up again yesterday into today. But let's look at a couple days ago. So the Russell, this zone has been here. We've had this zone here for a while, right? And so take a look. Yeah. Okay. So here, price breaks out above a 2 month high, makes a new 2 month high in the Russell, which again is going to trigger breakout trading to the upside, only to bring price right into a level where the smart money is selling. Okay, so the mistakes that the novice buyer is making here is, number one, they're buying after a huge rally in price. Number two, they're buying right into a price level where the chart already told us supply exceeds demand, likely in a very big way. And of course, the invitation to do that was likely a breakout of a 2 month high. Okay. In addition to that, we're very big on inverse markets. So, like, we would never think of putting a position on. Remember, we've talked about this in other sessions. How the stock markets around the stock markets around the world are designed to go up over time. We know that. We've talked about that. There's other sessions on that if you haven't seen the recording. So we're not big on shorting the stock market or shorting equity index futures. But when we do, we want to make sure that we have inverse help. So at the same time, the Russell, the NASDAQ, for example, up here this week, were into supply. The dollar was hitting one of our demand zones. Make sense? Dollar into demand, stocks into supply, profit zone for both. The probability of price turning is really high. And again, if you have a lot of novice traders buying up here into supply, that's what's going to cause price to turn quickly, sharply. Let's keep going. Also, a couple days ago, we had, and this is a day trading example. Some of these are swing trading examples. Some of these are day trading examples. Okay. So if you look on the left, here we have an objective demand zone that meets our structure and location criteria. Price almost comes back to this level here, but can't. Right? That's likely because there's a big supply-demand imbalance here. Anyway, price makes another attempt to come back to that level, and right here, this is 2 days ago, makes a new low on the week. Prior to this, this was the week's low. So a new low on the week, that's going to trigger alerts for a lot of novice retail traders who are going to short the breakout. What they don't realize is they're selling right into a price level where the chart already told us demand greatly exceeds supply. Novice traders on the sell side, professionals on the buy side, price turns and rallies right back to fair value. Okay. Make sense? Okay. Yeah, you know, someone in the chat's bringing up a good point that kind of brings me to something that's kind of in the back of my mind but you know, you think when you know, you think of buy stops and sell stops in the market, and for new people that are new to this, that's how you manage your risk, right? That's to protect yourself. But when you think about where people, you know, when you think about buy stops and sell stops and who's filling those orders, if I were to ask you, who's filling the buy stops and sell stops? Who's on the other, who's filling those orders? Most people are going to say, oh, banks, financial institutions, market makers, right? And for the most part, that's true. But why does it just have to be them? Why does the bank or financial institution, why do they get to buy, you know, very close to the turn in price, right? Because, you know, obviously our strategy is identifying the turn in price with a zone, a supplier demand zone. Why do we do that? Because it's the only way to attain the low risk, high reward, and high probability entry into a market. So, but when it comes to buy and sell stops, if you really understand, for example, this whole concept of people buying and selling breakouts at the absolute worst time, we can put ourselves in a position to also buy the sell stops and sell the buy stops, right? Why is it just the bank and financial institution that gets to do that? Why can't it be us? It all starts with understanding how the markets really work. Let's keep going. So here's one going back a little bit further. Okay. All right. So take a look. And this can be used, you know, again, any time frame, any market. It's just supply and demand. Now, let me say one thing before we move forward. Remember, there are supply and demand is everywhere. Okay. Every time price moves up or down, even a penny or a tick or a pip, it's because of a supply demand imbalance. So the vast majority of supply and demand imbalances on a chart, we have no interest in. We want to identify the price levels that have the most significant supply demand imbalance. And that's why we focus on structure and location. In other words, let me go back here for a second. We need to know where price is in relation to our map here, right? Another way to say this, you can call this a probability map. We don't want to do anything in the middle except hopefully get paid or wait. We want to take action at supply and action at demand. But we need to know where price is in relation to those. And that's what the rules are all about, right? Okay. Good question in the chat there. Is it true when people say forex trading is gambling? The way I would answer that, it's just my opinion, if you don't know what you're doing, trading any market is gambling. I wouldn't just direct that to one market or another. Believe me, the forex markets, even though the spot forex markets, even though they maybe operate a teeny bit different, a little bit different than other markets, it's still all about supply and demand, right? So, and look, nobody's pushing anyone to trade. Nobody's pushing anyone to put your hard-earned money in the market. The point is, if you do, make sure you know what you're doing, because this is no different than anything else. If you don't know what you're doing, there are smart traders and investors out there on the professional side that will be happy to take your money. Make sure you understand what you're doing first. Make sure you understand how the markets really work. And absolutely make sure you understand the risk involved. Okay. Another good comment there. Yeah, so I see in the chat, most people think supply and demand is the holy grail and don't expect to lose. The whole point of, I'm glad you put that in the chat, the whole point of focusing on the turn in price is because the reality is everybody on the planet is going to have losses from time to time. Okay? So you want to keep the risk low and the reward high. Anytime you buy or sell, the further you buy and sell away from the turn in price, your risk is going up and your reward is going down. That's why we focus on turning points with the strategy. Okay. All right, let's keep going. So this one's going back a little ways. This is not from this week, but I thought it was a good example. So right here, let's start on the left. So this is the setup out of our live session. So notice the supply zone here, price gaps down. And after it gaps down, it proceeds to fall even faster, or just as fast, right? And this is the Q, so this is the NASDAQ. This is the ETF for the NASDAQ. Clearly, the gap away from the little trading at the level and the gap away from the level suggest a big supply-demand imbalance at the level. Moving over here, so we're looking to be a seller here because the risk is low, reward is high, and probability is very high, and we have a nice profit zone to the downside. But now we need a trigger. We need an invitation. If you want to sell here, okay, if you want to sell short here or buy puts or whatever you want to do, you need it. You need a trigger. You need an invitation. Someone needs to buy from you up here. Okay, so that's important. What might that be? Well, let's go over here to the right. A couple days later, there's good news on this day. That's why you have a gap up in price. There was news on this day, and that good news invited people to buy the market. There's two really things happening this morning. That morning when as the market is getting ready to open. There's two things you can focus on, I should say. You can focus on the good news and equate that to a buy signal. And if you do, you're going to be a part of the group that buys. Or you can focus on how the markets really work, which is just supply, demand, retail, wholesale. And realize that whatever the good news is, it's just bringing price, right? It's inviting enough novice buyers in to bring price up to a level where supply exceeds demand, or retail level prices, right? And when prices are at retail levels in any market, you want to be the seller, not the buyer, right? Okay. So the other little subtlety here is when you have a gap up into the origin of a gap down, think about that. Let's really think about this for a minute, okay? Why did prices gap down? Because the supply-demand imbalance is so big on the supply side. Over here, who's buying on a gap up after a rally in price? Only a very novice trader would do that. I mean, would you do that in any other part of your life? Right? Do you walk in the, do you walk in the car dealership and say, look, I know that car is $30,000 over there. I know that, and I know you sell it to me for that, but I like it so much I want to pay you $50,000. Please take the extra $20,000. Would you ever do that? Of course we wouldn't do that. But why do people do that in the financial markets? Because they don't understand that how these financial markets work, these trading markets, is exactly how you make money buying and selling in any other market, right? Okay. All right. it's really all about structure and location. We stay far away from trend because trend has you buying and selling right in the middle. But I think we went over that a couple recordings ago. So let's keep going here. All right. So again, I tried to make a big point here, and I kind of got off on a tangent. Sorry about that. But there you go, Dennis. Exactly. Great point. Now imagine if we can chart that. What's happening to homes and things like that. You're seeing gaps, to the upside everywhere. Right. So so gap down because there's so much supply here. Gap up. So your most novice of novice buyer is buying where some of your biggest professionals are selling. That's the matchup we have here, and that's the point I'm trying to make. Jose, yeah, no, we definitely are fans of holding to the profit zone, and if whatever that takes on a swing trading side of things, maybe you're holding positions for a few days to a couple weeks. On the day trading side of things, obviously that's inside of a day. On the longer term position, could be significantly longer than that, maybe a couple weeks to a couple months or so, or maybe more. Okay. All right, let's look at another one here. So this is just yesterday. Anybody? So if you remember yesterday, the market was down. There was some news early in the morning yesterday, if you remember, prior to the New York Open. And what that did, so there was some news, market opens. Here we had a demand zone, demand or wholesale prices here. Notice there's so little trading here, you can barely see that level. Why? Because supply and demand is so out of balance. Okay. However, we need prices to come back down here if we're looking to be a buyer. Well, what's the invitation that may cause that? Some news came out, and then you could see here prices kind of chopped around a little bit, and all of a sudden traded below the prior day's low. A lot of people watch that. A lot of people have alerts set for that. There are services people pay for to tell them, some of these services say if price trades below the prior day's low, sell short. Some of you, I'm sure, have seen that. It's unbelievable. But so anyway, that was one of the invitations to sell short or sell as price broke the prior day's low. It's a classic breakout. That happened right into a price level where the chart already suggested demand greatly exceeds supply. That, again, is why you see such a ferocious turn in price. Obviously, given all of the novice space or fair value over here, there's really nothing to stop price from moving up so fast. And again, it's that whole, I explained it a few minutes ago, when it's down here. It's down here. I don't say it, but novice traders, and so many of them are caught on the wrong side of the market. That's why price spikes in the opposite direction. Okay. All right. Yeah. So, trading is like anything else, right? If you don't know what you're doing, make sure you know what you're doing before you do it. We see, look at the profits of some of the major financial institutions, right? There's a lot of big names out there. They make a lot of money, and they make it pretty consistently. So what are they doing that everyone else isn't? And part of what I wanted to do here is just kind of open your eyes to that. And instead of, thinking and consuming a lot of information that your average novice trader does, start to just take a step back and say, wait a second, how do these markets really work? Exactly how and why does price move in markets? And what does the professional do? Okay. All right. On that note, it was good to be with you and good to see everybody. Apologize if I didn't get to all the questions in the chat. And but be careful with those breakouts. Maybe think twice about what the breakout is into. That's the main point. And that was the goal of today's session. All right. If you want more information, you can always attend one of these free workshops. And also, too, from these workshops, what people do, you can also attend. You can also be in those the morning sessions for a week. The sessions that I showed you here with us, the pre-market session. So that comes after the workshop, though. All right, great to see everyone, and we'll see you next time.